Hello traders, welcome to the LFB and our global video charting review for Thursday, the 14th of April 2011. Hope I find you well. My name's Mark O'Haig from the LFB Trade Desk. We provide data and information for Forex and futures traders looking for somebody else to do the heavy lifting for them in regard to analysis and somebody to signal an alert when global markets start to move, whether it's the S&P, whether it's the Japanese Nikkei, whether it's silver bullion, gold bullion, oil, or the speciality for the LFB, which is the major Forex trading pairs. The 24-hour service that we provide will allow traders to get on with their day-to-day business and draw their attention when things start to move. We do have to point out that Forex trading and any form of investment does involve substantial risk of loss, is not suitable for everybody, and does involve substantial risk. We would ask that due diligence is done before taking any information from the videos. We post disclaimers to the website and we ask that you look and review and accept those disclaimers before proceeding. We're looking at the Japanese Nikkei and looking at a market that is very, very choppy at this point in time. Japanese equities are absorbing not only the economic outlook now for 2011, but also absorbing the tragedy that came from the March earthquake and subsequent tsunamis. We can see on the Nikkei charts the nuances of the Japanese Nikkei, even as a futures contract that does run for 24 hours a day. We can see on the Nikkei that we've got gaps where the market closes for lunch and gives us that very disjointed look and feel. But as we can see, we've got flat average trading range, not pushing up, even though we've got price action. The trading range is very small. The volume is sitting only at average, not strong, not weak, but certainly not looking to sustain any breaks of any range. And the relative strength index is neutral, sitting at the 50% line. So the Japanese Nikkei has given us no signals at this point in time in regard to potential movement one way or the other. Looking at German DAX, which really has overtaken probably the UK FTSE as the equity indices that you can look as a benchmark that would probably transpose the Asian equity sentiment that runs into the US sentiment. If you're a US based trader, probably the German DAX will give you a better overall view of what's happening. German DAX at this point in time is trading at the 50-day simple moving average, and we're right on that price point around the 71.30 area. The relative strength index is neutral, even though we've got choppy and overlapping price action. We're not able to break any ranges. The average trading range is okay, 24 points a day. When you look at the value of the German DAX, it's 0.3% each day that the German DAX is moving one way or the other. Volume is light. There's not a lot of participation, and therefore price action is going to be unlikely to easily break new upside ranges and hold unless we get some dramatically positive news headlines coming from the earnings season that's unfolding at this point in time. So we're looking for a weekly close on the German DAX below 7100 to indicate that we may get sustainable short price action, or above 72 on a weekly close to indicate that we could start to see some upside potential. But at this point in time, very little going on in German DAX trade. Looking at the S&P 500, this is the futures market contract, the front end month. We've got price action, unlike the German DAX that held support around the 50-day moving average. The S&P 500 has broken that support. So now on a weekly close, which is what we've got to look at, 13 13.20 is the number that we're looking for on a weekly close. Just this little swing point high from Wednesday. We can get above that 13.20 from a technical perspective. That may indicate that next week we could have some bullish upside momentum. It does look as though the path of least resistance, however, is going to be strong resistance at 13.10, and really wouldn't now be a surprise to see the S&P get down and test 1295. The relative strength index has turned the candles white, which means they're bearish, so we are favoring a short trend as well. Trend is pointing down towards 4 o'clock. The sentiment indicator, relative strength indicator, is telling us we're in short mode. Average trading range at this point in time, when we look at the S&P average trading range, sitting here around 3 points a day, so 0.2% per day on average of movement. Not as strong as the German DAX, but volume is very, very weak, just incredibly weak volume at this point in time, and that really would draw attention into this test of 1295 on the S&P. Subscribers got a signal on West Texas Intermediate on Tuesday of this week to go short from 110.50. That got closed out on the same day. We've also sent out to clients today a West Texas Intermediate signal that was short from 106.50, targeting 105.90. So we've just hit the first target. That one's now banked. We are in short mode in the near term. These are all 1 hour charts. We've got a short trend going on. We've got short momentum. We are light on volume. We haven't got a great deal of volume in the oil market. But when we look at the average trading range, we've got decent price action. We're running just under $1 a day on West Texas Intermediate, 90 cents, which is, looking at the movement, is nearly 1% of movement a day, which is good solid price action. We are favouring the short side of West Texas Intermediate. Now that the fundamental noise is out the way, technicals are going to dominate this, but in the near term we are looking to sell resistance on West Texas Intermediate. Looking at the precious metal markets, looking at gold, sideways chop on gold, not a lot going on. We did send a signal out earlier in the week on gold that got paid out to near term short, but since then we've had choppy and overlapping markets, very, very light on volume. Average trading range around $3 a day, so looking very low average trading range really historically for gold, and we're now on a relative strength index as well. Not really getting a great read either way. We're going to have to be very, very patient in the gold and silver market at this point in time. But one thing to notice is that it's only the oil markets at this point in time that look to have any real volume coming into them. The precious metal markets are very, very flat and are suiting just intraday traders. Looking at the 10-year Treasury note value, we were down towards 118. If you look at Treasury notes, there's a note value. As the note value drops, that means the yield, the interest rate, goes up. But we've seen over the course of the last week a move higher on 10-year Treasury note values, which means that the subsequent yield, the interest rates, will be going in the opposite direction, which the Federal Reserve will be looking for. 10-year note is very, very important in regard to economic outlooks, because it's the 10-year Treasury note that sets the tone for interest rates on an interbank basis. We are a little bit overbought on the Treasury note at this point in time. So we are oversold if you're looking at interest rates. So interest rates could start to move up a little bit. But at this point in time, Treasury notes are pushing higher, which means the yield is pushing lower just a little bit. So looking at all of that, what's the consequence to the dollar? Well, at this point in time, we're still in short mode on the dollar index. Again, 1 hour chart, futures contract front month, sideways chop, and even in the weak equity markets, when you've seen weak oil markets, weak S&P 500 market trade, benign European equity trade, benign silver and precious metal trade, We haven't seen the dollar getting bought. The dollar is very, very weak at this point in time. However, we've been saying for months now, the dollar just can't get away from this 75 to 76 area one way or the other. It's still gone nearly 10% to drop just to get it aligned with where equity markets are historically at this point in time. We have been down to 71 on the dollar index in that price range when equities were pushing higher 2009, 2010. Well, equities pushed up to yearly highs, but the dollar is still 10% off those lows. So although the dollar's weak, it does look as though we've found this inflection point. We've lost global correlations between the dollar, equities, commodities. They've been gone since the Federal Reserve implementation of quantitative easing programs. They will come back because historically the inverse correlation between the dollar and the global market is very, very strong. But at this point in time, benign relative strength reads, very, very low volume reads, but we are starting to get an increase in average trading range on the dollar index. So price action may be able to break a range. Take a look at euro dollar, which is the opposite of the dollar index. Euro dollar makes up nearly 60% of the dollar index, but as we can see here, where the dollar index has been in a flunk, we've got the euro dollar last couple of days that's pushed lower. But where euro dollars push lower, making up 60% of the dollar index, the dollar index then hasn't been able to move higher. And the reason is the Japanese yen has found buyers, the Swiss franc has found buyers, the Australian and Canadian dollars have continued to hold, and the Great British pound has gone sideways. So euro is the weakest of the major pairs at this point in time. Having absorbed an interest rate increase from the ECB, we're now getting record spreads on Thursday. The spread, the basis point spread on Greek debt just hit an all-time high. We've got stories of China buying Spanish debt. Well, obviously you've got to buy that in euros, but the euro dollar at this point in time looks incredibly weak. But until such time as we can see the Japanese yen and the Swiss franc move lower, if we look at the Swiss franc at this point in time, dollar Swiss, so the dollar's getting substantially weaker against the Swiss franc. And although this only makes up 5% of the dollar index, this is a reflection of the interest rate market. Until dollar Swiss, and to the greater degree the dollar against the Japanese yen, and if we look at the Japanese yen, there's the dollar against the yen. Those two, Swiss franc and Japanese yen, those two currency pairs, dollar Swiss, dollar yen, when they're showing dollar weakness, the other major pairs are going to find it hard to break and hold easily against the dollar. So what we're seeing at this point in time is euro weakness. Individual euro weakness. Cable's still getting bought, Great British pound against the dollar. CAD's still getting bought, the dollar against the Canadian. Aussie's still getting bought, the dollar against the Australian dollar. Swiss franc is still getting bought. Japanese yen is now getting bought. So it's just the euro. So when we look a little bit harder at that euro chart, we're going to start to look for bounces on euro because it would seem that the weakness in euro is not a precursor to the other pairs dropping lower. It could be that the other pairs will hold euro dollar higher at this point in time. A real conundrum right now. Have you noticed how many central bankers are out jawboning? You've never seen an economic calendar that's got so many central bankers talking up or talking down their currency. There's a currency war going on, and the market looks at this point in time to be really struggling to find a value on the quantitative easing programs from the Fed being curtailed. But there is a currency war going on at this point in time, and we would expect a continuation of sideways chop in these forex markets, with major movement coming only off of red flag economic releases. We will update you this evening with a video and our daily client note that will give you all of the numbers to work from these global markets. If you do want to try a subscription to the LFB website, you can go to the lfb-forex.com and you can get a subscription. If you're a new subscriber, you can get an introductory rate as well. Thank you for making the LFB an integral part of your daily trading. Keep an eye on your email for the client notes coming out, and keep an eye for notification that the video has been posted for this evening as well.